So, India, one of the fastest growing economies on the planet, just completely changed how it measures itself. And honestly, the results are really turning heads. We're going to break down this huge update, cut through all the jargon, and figure out what it really tells us about India's economic story. So yeah, let's dive right in.
Okay, it all kicks off with this number right here, 7.6%. That's India's new estimated GDP growth for the current fiscal year. Now you might notice that's a tick up from the old forecast of 7.4%, and believe me, that little bump has caught the eye of economists and investors all over the world. But here's the thing, this isn't just some simple number crunching.
Nope. The reason for that bigger number is actually a fundamental shift in the very blueprint they use to measure the entire Indian economy. We're talking about a complete modernization of the framework. And what we get at the end is a picture that isn't just different, it's way clearer and more detailed than anything we've had before.
So you gotta ask, why the big change? Well, think about it like this. An economy is this living, breathing landscape, right? It's always changing, and to get around, you need a good, up-to-date map. The problem? India was basically navigating with a map that was over a decade old.
And trying to measure a 2026 economy with a blueprint from back in 2011, well, it's just going to give you a distorted picture. I mean, think about everything that's happened in the last decade. India rolled out a whole new tax system, digitization exploded, and there were massive shifts in how people work and spend their money. The old map, it just couldn't keep up. It was missing huge parts of the story.
And you can see the difference right here. The old 2011 lens was trying to look at an economy before the huge nationwide goods and services tax, the GST, even existed. It was forced to use these proxy indicators, basically just educated guesses, to figure out what was going on in the massive informal sector. Fast forward to today's reality, and it's a completely different ballgame. It's data-rich. We're talking direct integration of GST data, digital transactions, new surveys, all of it finally lets us capture the real impact of things like e-commerce and the gig economy.
So, how exactly did they pull off this upgrade? What's under the hood? Well, let me tell you, this was not just a fresh coat of paint. This was a complete top-to-bottom data overhaul. They brought in new methods, tapped into new streams of information, and basically built a much more robust system right from the ground up. All right, one of the biggest changes is a technical one, but stick with me. It's a shift to something called double deflation. Now, I know it sounds super complex, but the idea is actually pretty simple. Instead of just looking at a final product's price and adjusting for inflation, this method also adjusts the cost of all the raw materials that went into it. You adjust the inputs and the outputs. And what you get is a much cleaner, way more accurate measure of the real value that was created.
And where's all this new data coming from? Well, you can see it right here. The system is now plugged into this absolute treasure trove of real-time digital information. We're talking GST transactions, vehicle registrations from the eVahan portal, even precise government spending data. Plus, for the very first time, they're using these new annual surveys to get a dynamic, regular snapshot of what's happening in the informal and gig economies. It's a game changer.
So you can really boil this whole thing down to 4 key pillars. First, a revised methodology, using best practices, like that double deflation we talked about. Second, bringing in all those new high-frequency data sources. Third, getting way more granular and precise with inflation adjustments, using over 260 categories. And finally, just getting much better coverage of those parts of the economy that were always kind of in the shadows, like the informal sector. It really is a comprehensive upgrade. Okay, so that's the why and the how of it all. But what about the so what, right? What is the actual result of all this work? What does this new, sharper picture of the Indian economy actually tell us about how it's performing? And here it is laid out in one simple chart. The old way of counting things projected 7.4% growth for the fiscal year. But the new, much more comprehensive series, it bumps that number up to 7.6%. It might not sound like a huge jump, but what it really shows is an economy that's performing even more strongly than we already thought.
And a huge driver behind that stronger performance comes from one sector in particular, manufacturing. According to this new data, the manufacturing sector has been a real powerhouse, a key engine for India's resilience. I mean, it's been posting powerful double-digit growth in 2 of the last 3 years. That's pretty incredible.
Just look at this snapshot from the third quarter for the details. Manufacturing is just soaring, growing at a stunning 13.3% year-on-year. And it's not the only one. Check out financial services and trade and hotels. They're also showing impressive double-digit expansion. This points to real broad-based strength across the economy. Now, if we zoom out a bit, this timeline of recent performance really tells a story of sustained momentum. I mean, you see growth hitting a peak of 8.4% in one quarter and consistently staying strong above that 7% mark. What this new data really does is confirm India's position as a true standout performer on the global stage.
So, okay, the numbers look better, the picture is clearer, but let's get to the bottom line. What are the real-world implications here? What does all of this actually mean for India's future, for the road ahead?
This quote right here from India's chief economic advisor, V. Anantha Negeshwaran, is absolutely key. He's basically saying that because this new data is so much more reliable, they're officially raising their growth forecast for the next fiscal year too. That move shows some serious confidence in the underlying momentum of the economy.
And that confidence, it leads directly to this next major milestone. With this much clearer view of the economy's trajectory, officials are now projecting that India is on track to comfortably cross the $4 trillion GDP mark during the 2026-27 fiscal year, a huge number. So, let's wrap this up. Why does all of this matter? What are the big takeaways? Well, first, it's about credibility. More accurate data gives global investors way more confidence. Second, it allows for smarter, more precise policy making. Third, it really cements India's standing on the global stage. And maybe the most important thing of all, the numbers are finally catching up to reality, reflecting the modern digital India that's been there all along.
You see, this whole overhaul wasn't just about changing a few numbers on a spreadsheet. It was about getting a more honest, a more accurate assessment of the country's real economic health. And that leaves us with one final crucial question. Now that India has this clearer, more accurate economic map in its hands, is it better equipped than ever to navigate all the global uncertainties out there and secure its spot as a top 3 world economy?